Hello guys, and welcome to my YouTube channel once again. In today's video I'll be showing you a simple strategy you can use to scalp the market and get up to, you can scalp for up to 1 hour, like 1 hour scalping without spikes, and you can also use it to catch spikes if you want. All right, so the strategy is going to be a combination of the what I shared in my last video, that is engulfing candlestick patterns and trend lines, guys. All right, so that's what we're going to do on this video. All right, so first of all, I hope you know how to draw trend lines. We know drawing trend lines involves pulling a line to touch some points, swing points created by the market. Like we have these 2 points here. Like let's say these are 2 points. This is a point here and this is another point here. We can join them like this to form a trend line. You can say we form the trend line. We draw a line to join two of them, and this is a trend line. Yeah, we can also draw a trend line this way. You can draw a trend line here to join these 2 points, because these are 2 points. As you can see, one moment, let me make this arrow to ticker arrow line. One moment, let me use another color, prefer blue color for a thickness of 3. All right, so as you can see, this was 1 point, this is another point, this is another point here. So we join them with this red line here, and this red line is a trend line. All right, so guys, when we draw trend lines, what happens? We draw the first, we just draw to join the first 2 points in anticipation for the reaction of price once it gets back to meet the trend line. Like these are the 2 points that we marked, we joined with the trend line. So we wait to see what price is going to do on getting to this trend line again. So when we draw a trend line, we extend it and wait. Now, as you can see on this line, at this point in the market, price got to this place, reversed, went up again, then came back and bounced here, guys. All right, so now when price got here, nothing happened. There was a little reaction that like it wanted to spike. That's why you're having this little wick at this point. So it couldn't, because of the selling pressure. The selling pressure was high. It had to break through the trend line and continued selling down. Continued selling down. So that is it. But our strategy today is going to show you how you are going to trade these breakouts. How you're going to trade these breakouts. Normally, if you were on the chart and see after taking note of these 2 points, and you drew your line, then at the end the price got back to this place and you see it breaking out, and form, let's say, one candle. Meanwhile, we're on the 15-minute time frame. It formed one full candle below. Then you want to go in for a trade, but it's not too safe that way. It is guaranteed, but sorry, it's not too guaranteed, but most times it works. Most times it works. If you are a high risk taker, you can just take it, enter the trade. But at some points you may not just want to go in for the trade. What we'll do is to look for a resistance zone. Like I told you previously, when using the engulfing candlestick patterns, we have to ensure, if we want to use it, they must occur on resistance or support zones. Now, drawing a trend line like this vertically, see this trend line here, this is a resistive trend line. It's just like a resistance zone. So because price gets to this point, reverses. So is this a supportive and trend line. This supportive trend line, then we can put another one on top here to form the resistive trend line. Let me just copy this one. Let me just duplicate this one. You can see that price actually respected the trend line from here like this. Sorry if I can't put it well. I'm on PC. On a PC, it's better, all right. So you can see the reaction of price at this point. This is a resistance zone. See, each time it gets to this zone, it reacts. It cannot go above it. So we call this the resistive trend line, while this is a supportive trend line. Now, as you can see right here, after the price must have broken this trend line, after the price must have broken this trend line, we know it wants to sell. So most times you might want to go in to sell at this point. It might pay you, but at some point it won't favor you guys. So what you need to do is to mark out a zone, because like now I can see somewhere here. If you look at this place, you see there was a reaction in the market, guys. You can see this point, there was a reaction in the market at this point. And if you draw a trend, draw this draw out a zone to mark out the zone, you wait for price to get back to this place, and after price get back here and start reversing, then you can now sell safely. Even if you have some little spikes, they won't take you out of the market. They won't take you out of the market here. All right, so let me show you something else, guys. Now look at another one here, guys. So we have a point here. See, now you can see, let me take out these other drawings. See what happened there, guys. You see, this is the first point. The second point, then you join it with a line. Join it with the trend a line, then you extend the line down. Now as you can see, price got back here, sold, got back here, sold, got back here, sold. Now, how do we apply the candlestick pattern I mentioned in the last video? As you can see, I told you the engulfing candlestick pattern indicates a reversal. It actually indicates a reversal. So now, if you wait for the price to get to the candlestick, to this trend line, after marking out your trend line, then price gets to the trend line, then you see it reacting in such a way that it creates a bearish engulfing candlestick pattern. Like here, if you look at this closely, you will notice that this is, hold on one moment. Yeah, this is a bearish engulfing candlestick pattern. I think the body of the red candle is bigger than the body of the green candle. Yes, it is. Let me use this crosshair to confirm it. Yes, it is. You can confirm that the opening of the green candle is above the close of the red candle. So that is a bearish engulfing candlestick pattern. That's a confirmation that the market will sell. Mind you, there are two confirmations there. It is at the trend line, and also the candlesticks formation at the trend line is a bearish engulfing pattern, bearish engulfing candlestick pattern, guys. So with this, you can go in for your trade and you sell down. Even if it is two candlesticks, after this candle forms, you take two of this, you can get 30. That is 30 minutes scalping. If you add this one, look at up to here, so you can get up to 1 hour scalping just with this. Then maybe you wait, the market, since it's just dancing around here, after it gets back here, now you can, this one is very obvious. You can see after getting to this trend line again, it formed a bearish engulfing candlestick pattern here again. So, and it's selling. You can sell as much as you want, you know. So once you enter a trade, like after the close of this one, you enter a trade here, you just put your stop loss above it, above this place. The same thing goes for here. Now the question I believe might be that will be in your mind right now will be how I am positioning my trend line, guys. Now you see trend lines, a lot of traders have their own ways of drawing trend line. Everybody has his own way of drawing trend line. Some traders will tell you only have to concentrate on the wicks. The trend line must only touch the wicks. While some will tell you the trend line only has to touch the body, not the wick. While some will ask you to use convert the chart to a line chart, then join the points. Like now, if I come here, I change this to a line chart, they will join only the points. When you join only the points, when you join only the swing points here with the line, if you go back to the main chart, if you change it back to candlestick chart, you see that the line will only be touching the body of the candlesticks and not the wicks. You see, so now what works for a trader is what they uses. Like me, I use both of them. I can start by drawing the trend line, because obviously if I am maybe the market, the chart, the market, the price just go to this place first, and retraced, I would want to join the week of this with the week of this. Then I will have something like this. Please just follow me, guys. I want to show you something. I would want to have something like this. One moment, please. Let me just try to expand it. So I would want to have something like, let me take out this one first. Okay, something like this. Let me take out this one also. So this is what I'm going to have. And as you can see, it did not touch these other candlesticks. All these points did not get to this place. But based on my understanding of trend lines, of using trend lines, you can always shift this trend line to touch what you want it to touch, like as long as it's very close and is in the same direction as what your direction of the market. So if I would miss, because normally I will not trade this one, I only use one to mark. I'm coming. I will not trade this one. I'll only join the trend line when the price gets to this point. Then I'll wait for the next. So if this one comes, it did not get here, it will go down. What I will do is to bring the trend line to touch this one here. Touching this one here, you can see that this green candlestick right here did not really close above here. It closed above the trend line, but is too small. Like the body that is down is far greater than what is above, and the next candle immediately is a sell candle. So even if it broke out, it's just a kind of, we can refer to this as a fake out. You can refer to it as a fake out. So I still have reasons why I would put the trend line on top of this one, then wait for the next candlestick, the next swing of the price. So you see, after putting the candlestick here, after putting the candlestick on this one, you see the next thing, and it happened again. This is where we had the first bearish engulfing candlestick pattern. Oh, scalp, and we still have another one here. You see, before it broke out, So what I mean there is, guys, the fact that you've drawn a trend line, there's no guarantee that price will get there. At times you need to adjust the trend line so that you get the result that you want, because as long as the market has never been perfect, your trend line can never be perfect. You just follow what the market gives to you is what you follow. So you can see, if I entered a trade, they would have made that many. Look at 1, 2, 3, 15-minute candles, that 45-minute scalping with no spikes. Then it got back the next time. I will scalp. Imagine I will scalp up to this point, guys. Imagine me scalping from here, from this candle down. How many hours would that be? You see, and each time you enter a trade, just put the stop loss right above the wick of the previous candlestick. Mind you, you are trading boom and crash, except you have enough equity or enough balance on your account that can withstand a spike. Mind you, you are scalping. So that is it, guys. That is it. So like here, like now, you see the market when the market got back to this line, it broke, breaking now and retested this trend line. Let me extend it. You see, so it broke out of this trend line and then retested it and still bought again. You see, now it came back again and still retested. This is a bearish engulfing stick pattern, sorry, bullish engulfing candlestick pattern here. You see, it retested again, then went up. So the next thing I would do at this point is to draw another, because this is a very clear swing point here at this point, is just to draw another trend line right here. Take this swing point, join with the new swing point that has been created, then wait for price to get to that level, get to the trend line. If price gets back to this trend line, I look at the reaction of the price. If it hits this line and tries to reverse and gives maybe a bullish engulfing candlestick pattern, Then I'll enter a trade to buy, to catch spikes. Mind you, this bullish engulfing candlestick pattern we have here, after the bullish engulfing candlestick pattern here, you see spikes. See spikes up to this point. See, you see. So if I see a bullish engulfing candlestick pattern here, I will get ready to catch spike. I will just place my trade, put my stop loss a little below the candlestick, like the wick. If it happens somewhere here, after if I saw something like this, then I put my stop loss around this region. Then I go for the trade, you see, or catch spikes. Mind you, we're on the 15-minute time frame. Catch spikes up to this point. That is excess money, guys. Excess money. So if the price gets here and then still breaks out, I'll wait for it to retest. On retest of this line, if it gives me a bearish engulfing candlestick pattern, I'll continue to sell. So guys, let's continue. Let's just backtest a little. Let's backtest. Let's backtest so we see what we're talking about. All right, like this one, this is not actually a trend line. This one is a horizontal resistance, kind of a resistance zone. It's a resistance zone, guys. It's a resistance zone. Resistance turn support. See, you can see. So these things work, guys. If you know these things, you won't even need indicators. Honestly, you won't really need indicators. You just be trading. See, price got to this point, reverse. See all this. Hold on. See all these points of reversal. You see bearish engulfing. Look at bearish engulfing here. You know, once you see bearish engulfing, you just enter a little trade and make some money, guys, depending on the market. All right, let's go ahead and look for our trend lines. Wait to mark trend lines. All right, one moment, guys, one moment. All right, so look at another opportunity here. See, there's something here. You see, now, like what I told you previously, if we join this as a trend line, so if we join these points with a trend line, you discover that at the third time, which we want to see if the price is going to give us a bullish engulfing. It tried to give a bullish engulfing candlestick pattern, but it did not work because the selling pressure was high. So you see it broke through. Then we wait for a retest before we can sell. But on the retest, it did not also give us a bearish engulfing candlestick pattern. So we couldn't sell. So we leave it. Unless the conditions are met, please do not go in for a trade. Ensure the conditions are met to avoid loss of money. Ensure that the conditions are met, guys. Like now, I can decide to draw another trend line here. See, now that's a trend line, guys. You see, it touched here. DHA started. You see, then we'll wait for the third touch. You can see the third touch here, but it did not give us the bearish engulfing candlestick pattern at this point. So we would skip it. We won't take this trade, guys. We won't take this trade. Based on the strategy. We're not going to take that trade. We'll just leave it. What I'm trying to say, I think this, guys, I spent a whole lot of time here. The video is already too long. So now the essence of, in fact, the whole strategy is try to mark out points, and wait for candlestick to get to the line. Sorry, the price to get back to the line. Once it gives you the candlestick pattern that we use for our confirmation, like the bearish engulfing candlestick pattern or the bullish engulfing stick pattern, then that's when you go in for a sell trade or a buy trade, depending on the direction of the market. For crash, if you see a bullish engulfing candlestick pattern on a trend line, you know it is going to buy. So you scalp it. If you see a bearish engulfing, you know it's going to sell, spikes are going to come, then you go in and catch some spikes. You can scalp up to 20, up to 1 hour, up to 1 hour, yes, depending on the time frame. Mind you can do this on any time frame. You can do it on the 30 minutes time frame, you can do it on the 1 hour time frame. And also you should know that the higher the time frame, the higher the chance of scalping for a longer time. Because now if we are on the 30 minutes time frame, look at this. This is 30 minutes time frame now. Let's check where we can. All right, so I think I've gotten something here. You see this? So the bearish engulfing stick pattern works here also. Okay, I do not have a bearish engulfing stick, but you can see the reversals that have been happening at this point. The reversals that are happening here are based on another type of reversal pattern which I've not mentioned on my channel yet. So I wouldn't want to bring those ones in now, because I've seen some evening star and shooting star candlestick patterns here that can signal a reversal and will want to go in for a trade. So guys, you need to practice this, just practice and stick to your strategy. Bullish or bearish engulfing stick pattern on a trend line. Once it is on it gets to the price gets to the trend line and you see any of those reversal pattern, you go in for your trade and put your stop loss just above it. Guys, if you're on the 15 minutes time frame, even if you scalp just 3 candles, which is 45 minutes, I think is enough to give you some reasonable amount of money in the market. Then you leave the market. Guys, you don't need to be greedy. The higher the time frame, the higher the chance of scalping for a longer time and making more money at the same time. All right guys, please, I think I should end the video here. It's already too long, and in my next video I'll try to make it more detailed and with more illustrations that will make you understand these price action trading strategies the more. So see you in my next video. Please, if you've not subscribed yet, please try and do so. Then like this video and give me your ideas or your suggestion in the comment section. Then I'll try to do my best in giving you what I know. I'm very confident to make you be a good trader and give you some good money in the forex market. All right, till my next video, see you guys, and peace out.